Sounds good.
Okay, so let's, Ben and Christine, thank you guys for coming and telling us what we should be doing on our taxes as students.
Yes, well, first thing I want to talk about, well, first of all, let's start with some introductions. My name's Ben Dickerson. I've been working for H&R Block for about 5 years. I'm an office manager. I teach income tax courses, and I am also, a preparer myself. We have 6 tiers with H&R Block. I would be the 5th out of the 6 tiers as far as tax preparation expertise.
So question, Ben, if we
Sure.
had students that were business majors that would want a part-time seasonal job, do you hire a part-time seasonal?
Yes,
Business
that's how I
majors?
got hired. Also, I know it counted as my internship for my accounting degree as well. So, for sure, yes, it's a good idea. And you're gonna need 9 hours, I believe it is, to take the CPA exam. So, I've already got my 9 done because I filled out a few forms and worked for H&R Block, so.
And the internship is a good foot into the door.
Yes.
Interning is a great thing to do
Yes.
for college students.
And, if you wanna strong arm, get a little better job, you have a degree and then you can, so. That's what you're supposed to do with it, right? So, anyway, all right, well, I've been doing this for, like I said, about 5 years. And today we're going to talk about, education-related credits, because that's the most important thing to discuss, because tax season is now. The government shutdown has no effect on us. Get your documents, bring them in. I know Missouri Southern has 1098T forms on their online at their ready. So you just need to grab them, download them, bring them in, or we can access them and get your taxes filed. Okay.
Ben, what does a 1098 tell students?
We're actually going to get to that here
Okay.
in just a minute. I'm going to start with some basic definitions, and then I'm going to show you the form and show you some specific details about what to do with it. Okay, so to get started, first I just want to talk about some basics for taxes. There's 2 different kinds of ways you can reduce taxes. There's a credit. It reduces your taxes dollar for dollar. Okay, so if you have a tax credit that's worth $10, then you reduced your tax by $10. Okay. Then you have a deduction, and a deduction will reduce the total tax, taxable income. Okay, so if you have taxable income, you have to do a calculation to figure out how much tax you have. So credits are generally almost always worth more than deductions are because they reduce the taxes dollar for dollar instead of reducing the amount in which your tax is calculated. Okay, so it's a direct reduction. So we're going to talk about tax credits more than anything today, not deductions, because credits are just going to be worth more. We're going to be talking about one where if you're a student, you should be seeing $1,000 in most cases on your tax return, $1,000 cash, refundable. Okay, so we're going to talk about how to do that, and really, to be honest, whether or not you should be paying someone to do it for you in some cases, because it's going to get a little complicated. Okay, so all right, and then we have another little tax term. It's called a phase out. What happens is you make too much money and then you start to lose the value of a credit or a deduction. Okay, most students are not going to experience that because most students, like me, were broke. Okay, so so you're paying your bills, you're trying to get to class, you're not rolling in dough. You're the type of folks that need to be getting that $1,000 refundable credit. Okay, so all right, so there's lots of tax breaks available. The main one we're going to be talking about is the American Opportunity Credit. That's the one that has a refundable part. So you have 2 types of credits. Credits reduce tax. A non-refundable credit can only reduce the tax down to nothing. So, whereas a refundable credit can reduce it past 0. Negative tax is the same thing as getting a refund. Okay, so we're going to talk about a very important refundable credit, and that's the American Opportunity Credit. Okay. The Lifetime Learning Credit, that's another credit that you can get. This is usually when you're done with school and you're going for your master's and you've got class. You've already finished 4 years, but you still want to get a benefit for your future classes, and that would be the Lifetime Learning Credit. It's not refundable. It can only reduce tax. It doesn't put cash in your pocket if you have no tax. Okay? So, and most students, when we talk about this American Opportunity Credit, if they don't work at all, they can still get it. And they're not going to have any tax. They're just going to get this $1,000. But we'll talk about that here in a minute. All right. So so there's 3 benefits you can get for going to school. There's the American Opportunity Credit. There's the Lifetime Learning Credit, there's another deduction. It's called the tuition and fees deduction. Most people are not going to want to get it because the credits are worth more, okay? So it's going to be rare for you to take this tuition and fees deduction. It still exists, it hasn't expired, but more than likely you're going to want to choose from the 2 credits because they're just going to be worth more on the tax return, okay? So, and then you have another benefit. When you're already done with school and you're having to pay that loan back, you've got interest that you got to pay, of course, all right? And that interest is going to be deductible, up to $2,500, generally subject to phase outs. So if you get some awesome job because you now have a degree, you know, you may not be able to deduct all of your interest that you're paying back. You might have to deduct a portion of it because you made too much money, which is a problem I would like to have. So, you know, doesn't bother me one bit. All right. So, all right, to get any of these credits, you have to be enrolled in essentially a college that accepts financial aid. You know, there's a lot of different definitions for eligible institution, but the easiest way to think about it is if you can get aid federally to go to these classes, then they probably count, okay? MSSU is obviously one of them, all right? Now, so let's start with this American Opportunity Credit, because earlier you said, what about the 1098-T? What does the form even mean? What's on it? Okay, we're gonna use one. We're gonna do kind of an example here to show you how to get this credit. Okay, so the American Opportunity Credit is it's calculated based on a maximum of $4,000 worth of tuition. Okay, so if your tuition costs you, let's see, if your tuition costs 10 grand, then 4,000 of that 10 grand you're going to use to get this credit. Okay, this credit is worth, it's going to be worth 100% of the first 2,000 bucks, and then it's worth 25% of the next 2,000. So it's worth potentially a total of $2,500 altogether. Okay, so the math's going to get a little weird. I'm not going to get off in the weeds too much here with describing all of this. I'm just going to tell you what you need to know to maximize the value of the credit. Okay, so a portion of this $2,500 is refundable up to 40%. 40% of $2,500 equals $1,000. That's why this credit can be worth $1,000 cash in increase in refund. It ends up going in your pocket. Okay, up to 1,000. There's a lot of factors. It depends. We won't go crazy with the specifics. Okay, but if you're a student and you paid tuition, more than likely you need to be seeing $1,000 on your tax return in increase in refund. If it's not there, you need to be asking whoever's doing your taxes, or if you're doing them yourselves, maybe you need to ask somebody that does taxes, where's my $1,000? Okay, so, all right. Now, if you are a dependent of somebody else, generally the person who claims you, they're going to get this credit instead. So if mom and dad are claiming you on the tax return, they're going to get the credit. Okay, and then it depends on their income. All right, but there's certain techniques that you can use that are in the instructions to where you can get this credit even in cases where somebody that is ill-informed will tell you that you are not eligible for it. Okay, and that's what I'm going to go into here in just a minute. All right, so main thing is this credit can be worth up to $2,500. 1,000 of it is refundable. So if you have no tax, you don't get to use the other $1,500. Okay, if you do have some tax, that other $1,500 piece will wipe it all out. Okay, so if you have taxable income and therefore tax, you want to get this credit on there not only to get you $1,000 but also to wipe out the tax. Okay, so it's a big deal, and there's a lot of students that don't understand some of the some very important things that you can do to coordinate your grants and your scholarships to get this credit that I'll talk about here in just a minute. Okay, so the expenses that you use to get this credit have to be tuition, fees, books, those kinds of things, okay? Generally, tuition is the easiest way to think about it, all right? So your tuition is going to be reported on a form. Now I'm going to pull the form up here. Now I'm going to use the 2019 draft, but I think it will be all right, okay? So this is kind of like what you see every year, all right? This is the form that your tuition is going to be on. You go to Lionnet, you go to the section where it says tax forms, you click on it, and then you can look at the form right there on Lionnet, okay? We need this to do your taxes, okay? Because if we don't have it, then you're not maximizing your refund, okay? So, there's two boxes you really need to be concerned about. I'm not going to get into all the other boxes, other than you just want to make sure that you know, you're going to school at least half time. There's a lot of requirements for the American Opportunity Credit. You got to be a full-time student, and you got to be paying for this tuition out of your pocket, okay? That means that it can't be paid for with scholarships and grants, okay? Most people have scholarships and grants. Most people will go to a tax professional, not ours, because I've had lots of classes over this, but we'll go to, let's say, a competitor and say, I want to get this credit, and they'll say, no, you can't, because your scholarships and grants, which goes right here, oops, right in this little box here, where it says scholarships and grants, box 5, they're going to say you can't get the credit because you got more scholarships and grants than you have tuition and fees, okay? And then you'll be like, oh, woe is me, where's my $1,000? I guess I don't get it. Well, that's not necessarily true, okay? So, when you get your 1098-T, you need to be looking, and you need to see if this box right here, payments received for tuition, or there might be information in box 2. Box 2 is the amount that was billed in tuition, and there was a change in this form, so it might be in box 1, it might be in box 2, we don't know yet. Look at both of them, okay? Didn't mean to muddy the waters there, but there's been tax law changes, and one of the changes is we're worried about what was actually paid, not what was billed, and so they edited the form. Okay, but the gist of it is, be looking what's in box 1 or what's in box 2. If it is bigger than your scholarships and grants, then you more than likely have a credit coming, because you paid more in tuition than what you got in free money to pay for that tuition. And you can't get a tax credit with free money, okay? It doesn't work that way. So, right here, if your scholarships and grants are less than your tuition and fees, more than likely you have a credit coming. You need to make sure you get that credit. If your scholarships and grants are more than your tuition and fees, generally you don't get the credit. Matter of fact, the amount that's in excess of those tuition and fees that you got in scholarships and grants, that's actually taxable income.
So do
Okay.
you have to report that as taxable?
Yes,
income?
that's taxable income.
Okay.
Here's the thing. So you might go to somebody that doesn't quite know what they're doing when it comes to taxes, and they're going to see this box 5 here, there's these scholarships. They're going to say, that's bigger than box 1, you don't get your credit, okay? But there's a special caveat that anybody that's a student needs to know, so that they don't accidentally not get this credit because of that circumstance, because you've got more scholarships and grants than you have tuition and fees, because you can't get a credit or a deduction with tax-free money. So here's what you do. Let me grab this. So we'll go to, so there's a form, I'm not going to get into the details, but this is the form that calculates the credit. In the instructions for this form, way down here, and if you want the details, it's the form 8863, if you really want to dig in. To be honest, most people don't. But that's what we do. Right here it says coordination with Pell Grants, scholarships, and fellowship grants. Okay? What this means is that, okay, go back to the 1098-T, if you would please. What you can do is you can say, well, I've got this tax-free money. Let's say that you had 10 grand in scholarships and you had 10 grand in tuition. Well, you don't have a credit because you broke even with tax-free money. There's no tuition excess in which to get this credit. So what you do is you say, you know what, I'm going to claim $4,000 of this as taxable income. I've decided that I'm going to pay taxes on $4,000 of my scholarship, okay? That's going to increase your total taxable income. It might increase your total tax, but the credit that you get for it is worth way more than the increase in tax. So you end up with $1,000 extra bucks in your pocket, basically, is what ends up happening in most cases. You can have no wages and only file taxes just to claim part of your scholarships and grants as taxable, $4,000, and then you can get this $1,000 credit. Okay? Or you can claim it as a dependent, and then your parents can get this $1,000 credit. Or whatever it may calculate to. There are phase outs. It could reduce, it depends on how much money they make. Okay? But what I want to make clear here is, now let's talk about the types of scholarships that you can do this with, okay? If I have cash in my pocket and I get a grant, and then I go down to the bursar's office and I just pay cash for the tuition instead, and then that grant goes right into my bank account and it's just money that's unrestricted, then that's an unrestricted scholarship or grant, and that's what we can use, okay? So, and that's what would happen, like with a Pell Grant. You go down to the bursar's office, if you just pay cash for the tuition, that difference in that Pell Grant is going to end up in your bank. You know, and because of those conditions, because you essentially keep the change, it's unrestricted. And because it's an unrestricted grant, you can coordinate it like the instructions for the form say. You can claim this little portion as taxable. Next thing you know, you might increase your total refund by really up to $2,500 because you're reducing tax and you're increasing your refund with that refundable portion. So I just want to make it clear that there's an obscure paragraph on the instructions for an obscure form that if you follow them, you make $1,000, okay? So, so the question is, do you want to try to do this yourself? We have do-it-yourself software. We have a product called Tax Pro Review, H&R Block does, where you can go online and you can do the work and then somebody will check it. We have a virtual preparation where you go online and a virtual person does the return for you and communicates through secure messaging. And then we have the premium, which is the retail service, where you come in and we sit down and we do a full interview and you get all the bells and whistles, so to speak, okay? So we have students that come in because they know that they don't know how to do this with the do-it-yourself software. They don't know how to get the forms to say what they're supposed to say to get the $1,000. All right, and that's just, I'm just being blunt. Yeah. You know, so so I urge you to consider getting with a tax professional and making sure that you are not being unintentionally disqualified for this $1,000 refundable credit. Okay, so that's the bulk of what I was wanting to discuss today. If you've got your 1098Ts, they're already sitting there on MSSU's website. Look at them. Let's go back to the 1098T. And you're going to see this form, yeah, right down there. And you want to be looking, is this box 5 amount bigger or smaller than this box 1 or box 2 amount? Okay? If it is, then the only way you're going to get a good credit is if the person that's doing your taxes knows what they're doing, because they're going to have to claim a portion of your scholarships as taxable. If box 5 is smaller than box 1, then we need to be looking at, are we maximizing the value of the credit? Maybe we need to claim a little bit of these scholarships as taxable to make it worth even more than it would be, because the difference between 1 and 5 is not $4,000. So there's, off the top of my head, there's 5 moving parts here to consider, and it's not that difficult to maximize the value of this credit. So I just don't want anybody costing themselves $1,000 in refundable credit because the way that you make it work is complicated.
Then we're comparing the amount that's in box 5 scholarships or grants to the amount that's in box 1.
Yes.
And then also or to the amount that's in box 2, but we're not adding boxes 1 and 2 together.
Correct. There's going to be information in either 1 or 2.
Okay.
I looked at mine and it was in box 1.
Okay.
But some of the schools have not quite caught up. I don't know if MSSU has or not. They're supposed to put it in box 1, but they're still putting it in box 2.
Okay.
And the reason why is because, you know, if I'm billed something, that doesn't mean I actually paid it.
True.
And the schools have been reporting the amounts that are billed, and we need the amounts that are actually paid to get the credit, because you don't get a credit for something that hasn't been paid yet.
Got
And
it.
what we were having to do is we were having to take the billing statement and the amount that was billed, and then make sure everything was actually paid. So this has removed a step for us, because hopefully now, or at least from 2019 on, there will only be the amount paid, and then we don't have to get the billing statement and do the reconciliation every time.
So 2
So-
is the amount billed, not necessarily the amount paid.
For 2017 and prior forms, yes. From 2018, they changed it to where 2 is just blank now.
Okay.
But that doesn't mean that there's not gonna be values in there, because the systems just haven't all caught up with each other.
Right.
But that's like way technical, you know, the reasoning behind all of that. But the gist of it is, even if your amount is in box 1 or box 2, just kind of treat them the same when you're trying to figure this out, all right? Some other qualifications for earned income credit are, for American Opportunity Credit are, you have to be a full-time student, you have to have these qualified expenses, and then there's a few other rules, and you can go online to irs.gov or to hnrblock.com, and you can just type in American Opportunity Credit, and it'll tell you all of the qualifications, okay? My main point is, I don't want to see anybody not get this credit because they didn't know that they can claim scholarships and grants as taxable to get it, okay? And most people do not know that. Most students don't know that, all right? There's students that are living on only student loans and scholarships. They aren't the dependents of anybody. They're living off of loans and scholarships, okay? They can be filing, claiming part of those scholarships and grants as taxable and getting a $1,000 refundable credit without having a single W-2.
So where do you put if you're gonna claim it as a taxable income, where do you put it as a taxable income?
That's a very good question.
Okay, thank you.
So let me answer it, but it's gonna take me a minute.
Okay, that's fine.
So we have to break out all the new barrage of forms that the IRS came out with to quote-unquote simplify the tax return. So give me just a minute to get that. So let's go with 2018 1040. So I guess I'll give you a tour of the new 1040 then.
And there's just one form this year?
Correct.
There's not
yes.
A, easy, just 1040?
No, so this is correct, there's only one form. There's no 1040A, there's no 1040 easy. So depending on who you are is, you know, that has to do with whether or not you can view this as a simpler return. Really, it's more like they kind of took what was already there and sliced it up and put it on different pages. You know, so that it would fold to certain dimensions. But, so if we look at the 1040, this is what it looks like now. It's got, you know, your personal information, your dependent information. So for somebody that had a 1040 easy, one could say this is more complex because we didn't have to put dependent stuff on a 1040 easy. So, I mean, you have to skip over it, you know, so it's all a matter of opinion, really. All right, and then our next page here, this is all the wages and the salaries and all that. Now, this is the rest of the return. Now, you have various schedules that have to be attached to this. Like, for instance, the wages, etc. There's a schedule that you have to fill out separately if you have more than one type of income other than wages. Or if you have certain deductions, there's a separate schedule that you fill out for deductions. There's a total of 6 additional schedules. So you have the new 1040 form, and then you have 6 schedules that have to be attached to it, depending on what type of situation you have with your income. Okay? So it's not cut and dry, easy. So as far as where you report that income, it ends up being on the very first line of the new 1040, but you have to put it on another schedule to then get it to it. Okay, so what they did is they took a bunch of lines out of the original 1040, they called them schedules, put them on separate pieces of paper, and then said that, you know, it was easier, so. So, anyway, yes, that's the bureaucratic soup I get to wade in. All right, so that's the gist of the 1040. I can show you all the individual schedules, but there's 6 of them. It would take an hour, you know, to go into all the details. The gist of it is, the 1040, it did get rearranged quite a bit. The schedules have the original line numbers from where they were on the 1040, which is kind of weird, but I guess to each his own on that. The gist of it is they just slice it up and to where you could staple it up and it's smaller. So did that answer your question?
It did, thank you. That looks quite different, that form.
It is quite different, yes. And what people don't realize is that there are 6 additional schedules now. And the additional schedules are pieces of the original 1040 that have been chopped out and then put in other places. Question?
Yes. So I came in here pretty late, but
Okay.
I was wondering that you were mentioning that the 1040 is different from the previous years,
Yes.
and that is it going to be like different to do it through like any other tax? What are the differences that we would have to apply to the new taxes, tax forms?
Okay, as far as differences, if you're using an online software and you're
Mhm.
answering a questionnaire-based software,
Mm-hmm.
you're not going to feel a difference in the tax law changes. However, that end form, I mean, you need to know how to look at that and understand that it's correct, because you're signing that and you're saying it's all correct, you know, at the end. So, so when it comes to an interface and the way that that feels, I don't see that being much different. You're still going to answer questions about kids. You're still going to talk about the type of income that you have. I don't see it changing much. But the output that you eventually sign off on is going to look completely different. You know, you're not going to be able to just look at a 1040 EZ and go, okay, there's my income, there's my tax, there's my withholdings, I'm done. You know, it's going to be a 1040 with different schedules attached to it. Okay? So, now as far as tax law changes, I'll give you the quick summary. The standard deduction has doubled. Okay, so if you were single, that was $63.50 last year, now it's $12,000. If you are head of household, it was $93.50 last year, now it's $18,000. Okay, if you were head of household, it was $12,700 last year, now it's $24,000. So pretty much it's doubled, all right? That means that people may have less taxable income because of that bigger standard deduction. That also means that people that generally itemize their deductions probably won't have as much of a chance to, because they have to jump over such a bigger number now. Okay, all right, the child tax credit, if you have kids and they're under the age of 17, that has doubled in value. That's worth $2,000 now instead of $1,000. Okay, and $1,400 of it, up to $1,400 is refundable. So up to $1,400 can increase your refund. Okay, what else?
That's $2,000 a child.
$2,000 a child, yes. If they're under the age of 17 and they meet all of the other conditions to be a qualifying child for child tax credit. Earned income credit hasn't really changed. Okay, it's still kind of like a bell curve. You make money until it increases and it increases until you start making too much money, and then it decreases and decreases until it's gone. Okay, so earned income credit has not really changed much. Now, the dependents used to be you'd claim a deduction for yourself and your dependents, yourself, your spouse, and your dependents. Excuse me. That was worth $4,050 apiece. So if it was me and, let's say, my wife and 2 kids, then that would be 40/50 times 4. So that's about $16,000 in deductions. Those are all gone, okay? There's no more dependent exemptions, there's no more personal exemptions, there's no more $4,000 a person, all right? So that makes it swing kind of weird, you know? If you're married filing jointly and you have 3 kids, you, in 2017, you deducted $12,700 for your standard deduction, and then you deducted $40/50 a piece for you, your spouse, and your 3 kids. That's $20,000. Okay. Standard deduction doubled to $24,000, but all the deductions for all the kids went away. So that person in that case, they went from, let's see, 20,000 plus 12. They went from 32,000 in deductions down to just 24,000 in deductions. So they actually might have more tax, maybe they won't. It depends on their tax bracket as well, which also changed. All the tax brackets, except for the very bottom one, the 10% one, they are less percentages now. Instead of 15, it's 12. Instead of 20, I think it's 17. I'd have to look at them again. Question?
Yeah.
I'm listing a lot of stuff up, I know. Go ahead.
What if you get legalized married in the middle of the year?
If you're married at any time in the year, you're considered married for the entire year.
Okay.
Okay, so if you're married on December 31st, you're married all year.
And how about if your spouse is in a different state from you?
Okay, as long as you're married, you're married. I mean, as far as being physically separated, let me give you an example. Let's say that, let's say I have a spouse and we're not getting along too good, and we're physically separated for greater than 6 months of the year, and she's got all the kids. Okay, very realistic scenario. All right. In that particular case, since I don't have any dependents, I have to file married filing separately. Since she has the kids living with her and she was physically separated from me for greater than 6 months, then she could file as head of household more than likely. Okay? In all other cases, it's married filing jointly or married filing separately, regardless of where the other person is. Does that answer your question?
Not exactly, because
Okay.
I was like wondering about he's in if he's in Florida, for example, and I'm over here, and I've had I was separated, we weren't separated, but for school and education purposes,
Sure.
we were separated. So do we file taxes for this state or for the other state?
You'll
how
have
does
to
that
file
work?
jointly, and he'll be a resident of that state and you'll be a resident of this one, and then you'll file a return for 2 different states.
Okay.
So you'll have a federal return, more than likely married filing jointly, and then you'll file a Missouri return. His income will also be on the Missouri return, but it'll get taken off.
Okay.
And then your income will also be on the return, if there is one, for whatever state he's living in,
Okay.
and then your income will be taken off of his.
Okay.
So it's gonna be federal and then more than likely 2 states.
Okay.
And generally, married filing jointly gets you a better tax outcome than separately.
Okay.
So, did that answer your question?
Yeah, that one.
Okay. So, there's lots of changes is the main thing, and they're big changes. And, I would avoid comments that try to make sweeping statements about the changes, because they are entirely subjective. I could talk to somebody that has 2 kids and one of them's 18 and one of them's 15, and they could have a totally different outcome than somebody that has 2 kids that are both under the age of 17. Just because a child's age changed, that could cause a big swing in a refund, So as far as overall, people are going to be paying less in total taxes generally. Most people though, especially people that qualify for the credits I was talking about earlier, a lot of them aren't even going to have any taxable income anyway. They're just filing to get a refund. And there's a whole bunch of people that they pay negative tax essentially because they get so much in refund in the form of refundable credits, it wipes out any taxes they would have ever had to pay anyway. So some things to consider. All right, so in summary, I'm going to wrap this up because I went 8 minutes past my usual 30 minutes mark for when people can stand hearing about taxes. So usually right at about 30, that's where the deer in the headlights kind of sets in, and I totally understand. All right, so a couple other things. Actually, you know what? That's pretty much it. And does anybody else have any questions in general?
Can a student that's on the baccalaureate level, would they ever take the lifetime learning credit, or will they always take not always, but most of them would take the American Opportunity?
Most of them will take the American Opportunity credit for the first 4 years.
First 4.
However, if you're like me, you went to school where you only had a piece of the year in the first 4 year, or in the first year. I didn't claim the credit on purpose for that piece of a year, I took the lifetime learning credit instead because I could then take 4 full years where I had more tuition in which to get it. So I actually chose not to get it on purpose in my first part year so that I could then get its full value 4 times. I took the hit, but in the long term I came out ahead. Okay, so there is situations where, or maybe you have someone that only showed up for 1 summer class. You don't want to waste a refundable American Opportunity Credit that you can only use 4 times when you have less than $4,000 worth of tuition to work with to maximize its value.
So this can be used after or for graduate programs?
The lifetime learning credit can, the American Opportunity Credit cannot. The American Opportunity Credit, you have to have not finished your degree yet, and you can only use it for 4 years. Also, there was a credit back in the day called the Hope Credit, and if you claim that, that counts as American Opportunity Credit years, but to be honest, most students haven't because that credit's just too old. You know, I didn't get it.
But that was the one you could only use your first year in college, and then after that you used lifetime learning maybe?
The American Opportunity Credit is a substitute for what the